So buying your first home, let's be real. The mortgage process can seem like its own secret language, right? And most lenders, they are not trying to confuse you, but they definitely don't always explain things clearly or in just simple terms. You get pre-approved, right? But no one tells you what can make that approval disappear just like that. You see a great interest rate online, but turns out that that's not the one that you're going to get. And by the time the fees roll in, you're just knee deep in paperwork, wondering if you're making the right choice at all. Hello, I am Lynette Selby, and I help first-time buyers just like you every single day. And in this video, I'm going to break down a few things that lenders don't always tell you up front and how you can ask the right questions before things get very overwhelming and so confusing. So let's jump right into it. So first up, let's talk pre-approval. Just because you've gotten that pre-approval, that does not mean that you're 100% in the clear. And I know that it feels like a green light. You know, you've got your letter, you're feeling good, but that pre-approval is based on your finances right now. And if anything major changes, like switching jobs, financing a car, opening up a new credit card, or even moving money around, like a large amount of money, that can throw everything off. And I've seen loans fall apart days before closing because of that one simple thing. So I always tell my clients, once you are pre-approved, hit that pause button real fast on any major money moves. Seriously, just wait until you got those keys in your hands before you do anything major, before you go out and buy furniture, before you open up a new line of credit, before you change jobs. Make sure you are closed, you got your keys, because any changes to your financial profile can completely derail everything and it could cause your deal to fall apart. So next up, let's talk about those interest rates. And you've probably seen the ads, rates as low as 6%, but what they don't tell you is that is someone with a 780 credit score, putting 20% down or a very specific loan type. So if your scores are lower or your down payment is smaller, then your actual rate may be a bit higher, and that is totally normal. Rates also change daily. So here's what you can ask your lender. What's the rate for my specific situation? Can I buy down that rate a little bit? And when can I officially lock in my rate? Because even a half-point difference can affect your monthly mortgage payment by hundreds of dollars and change what you qualify for. So now let's talk about loan estimates. So you get this document that looks super official with numbers everywhere, lots of terms, and it can be a little overwhelming. But here's the secret. Some of those numbers are just placeholders. Others, you can actually shop around. So I tell my clients, don't be afraid to ask your lender, can you walk me through this line by line? And pay attention to those loan origination fees. That's the lender's fee to create that loan. And that sometimes can be negotiable. Then check your appraisal, title, credit report, and other costs that are associated with that loan. And then ask which ones are fixed and which ones you can compare. You know, at the end of the day, this is your money and your future home. So you deserve to know where every dollar is going. And now let's touch base on that credit score, because it does matter more than you think. So it doesn't just determine if you're approved, it also affects your interest rate, your monthly mortgage payment, and whether you qualify for first-time buyer programs, and how much you'll owe upfront in fees or mortgage insurance. Even a small jump from like 640 to 680 can save you thousands of dollars. And that's why inside of my 90-day first-time buyer blueprint, I share some smart, safe ways to improve your scores without gimmicks or credit hacks. We don't want any of that stuff. So the earlier you start, the more options you'll have. And here's the big one. You are allowed to shop around, and you should absolutely shop around. So most buyers think that they have to go with that first lender who says, yep, you're pre-approved, and that is not the case. Talk to at least 2 to 3 lenders, especially if you're comparing different loan types. Ask them all the same questions. Get the estimates in writing and compare everything side by side. And if you don't know where to start, That's where my 90-day first-time buyer blueprint actually comes in, because it includes a bonus checklist. It includes 15 smart questions to ask your mortgage lender, and you can literally print it off and take it with you and ask those questions line by line. But here's the bottom line. Buying your first home should feel exciting, not overwhelming. And when you understand the lending side of things, it gives you so much more confidence. So if this has helped you, go ahead and give the video a like, subscribe, and drop me a comment below. Have you started talking to lenders yet? And what has been your biggest question? And if you want this full step-by-step plan that walks you through the entire process from credit prep to closing, make sure you grab my 90-day first-time buyer blueprint below. It has checklists, lender questions, credit tips, and so much more. And of course, if you ever need help with finding a trusted lender or just have a few questions, I'm always just a message or a comment away. But remember that you got this and I got you. I'm here to help you through this process 100%. And if you do want to schedule a call with me to learn more, I'll leave a link in the description box with my contact information. You can schedule a call with me for a day and time that works best for you. But again, thank you so much for watching the video, and I will see you guys next week. You take care. Bye-bye.